Hi students, this is Dr. Pandian from Kasinada College of Arts and Science. The next important chapter in income tax is scope of total income or incidence of tax. What is scope of total income? Under the Act, incidence of tax on a taxpayer depends on his residential status and also on the place and time of accrual of receipt of income. It is based on the income earned whether in India or in any foreign country. It is also called as incidence of tax. This is the meaning given in the Act. What is that? That is an income, whether it is taxable to a particular individual in the particular year. It depends on the residential status of the individual. The residential status of the individual may be divided into three. One is resident, another one is resident not ordinarily, and third one is non-resident. If you are a resident, then certain incomes will be taxable. If you are a not ordinary resident, certain incomes will be taxable. If you are non-resident, certain incomes will be taxable. This is called the scope of total income. This is based on the income whether it is earned in India or in any foreign country. If the income is earned in India, it is taxable to all the categories of the residents. That is resident, non-resident and not ordinary resident. Whereas it is not earned in India or it is any income earned in any foreign country, the taxable portion will be different, and this is called the scope of total income. So we want to know what is Indian income and what is foreign income. First we will see what is Indian income. Indian income is any income earned in India, received in India and accrued in India. Earned in India, if you have earned the income in India during the relevant previous year, then it is called earned in India. Then received in India, if you have received the income in India, whether you have earned in foreign country, it is not a problem, but you have received in India in the relevant previous year, then it is called as received in India. Then third one is accrued in India, that the income will arise for you in India during the relevant previous year, that you will receive the income in future, then in the previous year itself, then it is called as accrued in India. So earned in India, received in India and accrued in India, all these incomes, they are called as Indian income. Then what is a foreign income? Foreign income is the income not received in India, then you have received in any foreign countries. Then the income does not accrue or arise in India, then these two incomes, they are called as foreign income. Any income earned or received or accrued outside India, then it is called as foreign income. So to in nutshell, any income earned in India, received in India and accrued in India, it is Indian income. Any income earned in India, earned outside India, received outside India and accrued outside India, then it is a foreign income. The next aspect is the rules for solving the problems relating to the incidence of tax or scope of total income. First, we want to divide the incomes. You want to categorize the incomes to whom it is taxable. So we want to divide it into three categories. One is resident, another one is not ordinary resident, and the third one is non-resident. First, the nature of the income. Depends on the nature of the income, we can categorize whether it is taxable to a resident, not ordinary resident and non-resident. You see the table, first different kinds of income and the three categories of the residential status is given. Number one is income received or deemed to be received in India. That is income received in India. It is taxable to all. You see that it is taxable to the three categories. The second one is income earned in India. If the income is earned in India, then it is also taxable to all the three categories: resident, not ordinary resident and non-resident. Then the third one is income earned or received outside India from a business controlled or a profession set up in India. That is, you are earning an income outside India or receiving an income outside India, but the control from a business, but the control of that business is in India, then it is taxable to resident, not ordinary resident, and non-resident. Then the next one is, fourth one is income earned or received outside India from a business controlled or profession set up outside India. That is, you are earning the income outside India from a business and the control is also outside India. Then it is taxable only to the residents and not to the not ordinary resident and non-resident. Then the next one is income earned and received outside India from any other source. That is, the previous category you have seen that business or profession. Now other sources. We are having 5 heads of income. One is income from salary. Next one is income from house property. Third one is income from business. Fourth one is capital gains, and fifth one is other sources. So except business, if you are earning any income outside India, then it is called as any other sources. If the income is received on outside India, then it is a foreign income. So it is taxable only to resident and not to the not ordinary resident and non-residents. Then the next one is incomes earned and received outside India in the preceding years and remitted to India during the current previous year. That is, you have incomes which you have earned and received outside India in the preceding years, but you have remitted to India during the current previous year. That the income during the previous year, it is not a problem. It has been earned in the preceding years and now only you are remitting in the current previous year. So it is not taxable to anyone. Resident, not all resident, and non-resident. And the last one is the past untaxed profits, dividends received from Indian companies, gift from relatives, agricultural income in India. These are the exempted incomes. So these exempted incomes are not taxable to any category of the residents, that is resident, not ordinary resident, and non-resident. So this is the rule regarding the scope of total income computation. So to be clear, income earned in India, received in India, and accrued in India, these three are Indian incomes. These are taxable to all the 3 categories of the residents. Then any foreign income which is taxable only to the residents and not to the others. Then if there is a control in the business in India, then it is taxable to the resident and not ordinary resident, and it is not taxable to the non-resident. And certain exempted incomes which are given in the problem, then it will be exempted to all. This is the simple rule you want to keep in your mind while working out the problem. Now let us see a sample problem in scope of total income. You see that Mr. X discloses the following particulars of his receipts during the financial year. First one is salary income earned at Pune but received in Sri Lanka, rupees 2 lakhs. That is, he has earned the income in Pune. So it is an Indian income, so it is taxable to all. Next one is profits earned from business in Kenya, which is controlled in India, half of the profits being received in India. So you see that profit earned from a business in Kenya, which is controlled in India. Half of the profits being received in India, rupees 2,20,000. So in the 2,20,000, you calculate 50%, 1,10,000. 1,10,000 is received in India. So no problem. You tax to all types of resident, not ordinary resident, and the non-resident. Then the remaining 1,10,000, it is a business in Kenya which is controlled in India. So the remaining is taxable to the resident and not ordinary resident and not to the non-resident. So 1,10,000, it is taxable to the first 2 categories and not to the third one. The another 1,10,000 which is taxable to all because it is received in India. Okay, the second one. Third one, income from property situated in Canada and received there. That you have a property in Canada and you have received that is outside India, so it is a foreign income, so it is taxable only to the resident and not to the others. Then the fourth one, income from agriculture in Bangladesh and brought to India. That is income from agriculture in Bangladesh and brought to India. Then it is also a foreign income, so it is taxable only to the resident and not to the others. Then the next one is dividend paid by the Indian company but received in London. That is dividend from Indian companies, it is exempted income. So this 22,000 will not be taxed in all the types of residents. Next one is interest on USA development bonds, and one half of which was received in India, rupees 44,000. That is interest on USA development bonds, it is a foreign income, but one half is received in India. So 22,000 is taxable to all, and the remaining 22,000 which is received outside India, so it is a foreign income, it is taxable only to the residents. Then past foreign untaxed income brought to India, that is the past untaxed profit, it is also not taxable to all. Then next one is land sold in Delhi, consideration received in Canada, resulting into capital gain, rupees 2,50,000. Land is sold in Delhi, so the property is in India. Consideration is received in Canada, it is not a problem, resulting into the capital gain. This is the income which is earned in India only because the land is in Delhi, so it is taxable to all. Then income from structure designing consultancy service set up in Germany, profits being received outside India. This is income from Germany that is outside India, so it is taxable only to the residents. So this is the problem. Then you see, determine his taxable income for the previous year 2021 if he is resident and ordinarily resident, resident but not ordinary resident, and non-resident. Then you see the answer, computation of taxable income of Mr. X. You want to write in all the problems this previous year and assessment year. Now 2019-20 is your previous year and 2021 is your assessment year. You want to write in all the problems. What they have asked in the question, the same thing you write as the heading, computation of taxable income of Mr. X, previous year and assessment year you want to write. Then the serial number, particulars of income, resident, not ordinary resident, and non-resident. It is given as a format, the same format you write here. Then number one, what it is there in the problem, the same thing. If you know, you cut short it and write, otherwise you write the entire thing and you put the amount. Salary income earned at Pune but received in Sri Lanka, it is an Indian income, so I have put in 2 lakhs, 2 lakhs, 2 lakhs. Then for all, next second one, profit earned from business in Kenya which is controlled in India, half of the profit being received in India, so total profit is 2,20,000. Half means 1,10,000 and 1,10,000. So the 1 lakh first 1,10,000 it is received in India, so it is taxable to all. The second 1,10,000 is the business is controlled in India, whether the business is in foreign country but it is control is in India, so it is taxable to first and the second one, resident and not ordinary resident. The third one, income from property situated in Canada and received there, so it is a foreign income, so it is taxable only to the resident and not to the others. And the fourth one, income from agriculture in Bangladesh and brought to India, it is also a foreign income, so it is taxable only to the resident and not to the others. Then the fifth one is dividend paid by the Indian company but received in London. This is a dividend of Indian company, it is not taxable to anyone, so it is exempted, so it is not taxable to anyone here. Next, sixth one is interest on USA bonds, and one half of which was received in India. The amount is 44,000. One half means 44,000 into half is 22,000. So 22,000 is received in India, so it is taxable to all. Another 22,000, it is a foreign income, so it is taxable only to the resident only. Then the past foreign untaxed income brought into India, it is not taxable to anyone. Then the next one is land sold in Delhi, consideration received in Canada, resulting into capital gain. Land sold in Delhi, so it is an Indian income, so whether it is received outside is not a problem, so it is taxable to all. Then the next one is income from structure designing consultancy service set up in Germany. Profits being received outside India. The business is set up in Germany and the control is also in Germany and it is received outside India. So it is a foreign income. So it is taxable only to the residents only. So finally you total all the resident column, not only resident column and non-resident column. It is a taxable income. This is the problem, sample problem regarding scope of total income. Then the another one I have given for your revision. Ms. R, an Indian citizen, furnishes the following information of her income during the previous year 1920. One is professional fees received in India. It is Indian income, so it is taxable to all. Then next one is income earned in India but received in France. It is 15,000. Income earned in India, so it is Indian income, taxable to all. Dividend on shares of Indian Cooperative Bank received in India. Dividend on shares on Indian Cooperative Bank received in India. Dividend from companies is only exempted. Indian companies alone exempted. Other dividends are taxable. So dividend from Cooperative Bank received in India is an Indian income, taxable to all. Then salary earned and received in France, rupees 5,000. It is taxable only to the residents because it is a foreign income. Then untaxed income for the year 1718 brought into account rupees 12,000. Untaxed income means past untaxed profits. It is not taxable to anyone. You are required to find out the gross total income for the assessment year 2021 if she is alternatively resident and ordinary resident, resident but not ordinary resident, and non-resident. The same format I have worked out in the above problem. The same thing you do and you compute the gross total income or the taxable income of Ms. R. Okay, this is regarding scope of total income. If you are interested in my above video, you can share my video, like my video, and give your valuable comments, and you subscribe to my channel by pressing the bell icon in the front. Thank you. Now